Bankole Odusanya is the head of fixed income at UBA, one of Nigeria's tier one bank. Bankole is joining us from FMDQ Exchange Place in downtown Lagos for this debt market wrap for the week. Thank you, Bankole. Good morning. Welcome to the show.
Thank you, Boston.
Great to have you. So, explain the secondary market yield curve. Now, we had a lengthy conversation with Ayodele Jiebo a little bit earlier. So, if you look at the week so far, give me a summary of it.
Okay, we had another Nigerian Treasury bills auction where very few Treasury bills were sold. Last week, 42 billion was sold, and this week, just 7 billion was sold. What it means is that every week, as funds mature, we have a lot of more money chasing very few Treasury bills. And don't forget that most of the participants locally are not allowed to buy from the OMO market. What this then means is that we're seeing most of our bondholders seek alternatives to get better yields. So we've seen a drag down on the short end of bond market. So we've seen activities on the bond market. There was a bond auction this week where rates stopped at 11, 12, and 13% for 2023, 2029, and 2049 bonds. They did not drop as low as we expected, as DMO itself took advantage of the drop or crash in rate, basically. They offered 150 billion and sold about 260, taking an excess of about 110, 120 billion. The other concern for us in the market is that in search for alternative yields, we are seeing most fund holders beside PFAs ask about euro bonds and euro dollar notes. What this portends or means is that there will be demand for FX in order to buy those assets. That will put more pressure the I&E FX market and parallel market, where rates have gone up, each up about 2 naira at least the last few weeks.
So, in other words, where is the liquidity right now at the marketplace? What's the liquidity position as we wrap up the trading week today?
System is excessively liquid because there are few instruments to buy and rates are very low on the NTB end. And in fact, there are some instruments, despite the low level of yield, we can't even find those instruments. They're not on offer. And then on the overnight interest rate market, rates are also single digit. So it's a liquid system. Despite OMO pop-up, we have rates on low for now. So it's liquid and we expect that to continue new year, basically.
So in the coming week, which is the week of Christmas, and a 2-day public holiday next week, what's your playbook? Are you folks, dealers and traders beginning to wind down, as it were? Will I see a bit of an active market? Do you think the yield curve is going anywhere significantly different from where it is at the moment, Bankole?
Yes, it's a positive yield curve. And we'll see more action on the bond end, where the DMO has sold even more than what they offered. See some off-takers, come for some more bonds which are still at double digits. Besides that, for local corporates and individuals who can't buy NTBs simply because of non-availability, we'll see them do more of savings and then do some more term deposits whose rates have crashed as low as 1% from banks right now, basically. But like you said, there's lull in activity because year end, and then more demand on the FX for repatriation purpose. But that line has to be watched by the central bank going into the next year. Parallel markets rates have dropped about naira, and we have seen the same pressure at I&E market.
Okay, let's leave it there for today. Bankole Odusanya, head fixed income at UBA. Thank you so much. Do have a great weekend and see you at the other side of the weekend.
Thank you.
Great. So, quite a lot to talk about, but let's give you a very quick preview of the trading day on Thursday. The stock market remained tepid, 26,584. The market about 30 basis points in the negative territory. Looks like this is how we're going to close the year. No significant uptick to or downside on the composite index, but anything can happen in the market. Never say never. But if you flip that page and you look at the level of activity, that tells you that investor sentiment still remain very strong. We came in Wednesday with about 200 million shares in terms of transactions. We did about 100 plus above that on Thursday, and that gives you a sense of where we're coming from. But in terms of deals, that's 2,690. That's a bit lower than about 3,000 we did on Wednesday. So in terms of the volume and the value, that tells you that investors are still looking for, they're hunting for profit, as you heard all the story around the fixed income space. So if you look at the banking sector and their cousins, insurance and the oil and gas in the next page, which you're just looking at, that gives you a sense that it's not over yet. Fund managers, investors, everyone is looking out for how to eke out some gains before the door closes on 2019. Your consumer goods was down by 0.05%. Industrial goods were unchanged, but those who have some liquidity, the banks and insurance, are the ones that made those gains on the counter yesterday. Oil and gas was 0.9%. Again, Oando is still riding the news of his 20-year gas supply arrangement for NLNG Train 7, which will be around the year 2024. So this is good news for Oando, which was announced a few days ago, and this integrated energy company is still riding. Investors put 1.62% on the share price of Oando yesterday to 3 naira 76 kobo at the closing bell. So let's just hang that there. The big story for this week is Nigeria's budget for 2020, which Mr. President, of course, signed on, which will be effective 1st of January 2020. But we're still breaking it down, trying to get a sense of when do we wrap up year 2019, which was signed in May. Will it go into 2020, or will the government try to wrap up 2019 this week, next week, and try to have a clean January to December calendar next year? This is what the finance minister says yesterday in this report that we covered for you.
Days after the president signed the 2020 budget, government officials, members of civil society organizations, and Nigerians from all walks of life are gathered here for the budget breakdown. Before highlighting details of the 2020 budget, the Minister of Finance speaks on how the 2019 budget fared in terms of implementation and revenue generation.
Capital releases could only commence after the signing of the 2019 budget, which was done on 27th of May 2019. As at 12th of November, we have been able to release 1.212 trillion naira in capital releases. 1.212 trillion naira in capital releases. Spending on capital has continued to be prioritized in favor of critical ongoing infrastructure projects in the power, rail, as well as the agricultural sectors.
And then she explains the details of the 10.5 trillion naira budget. Key components of the budget includes a capital expenditure put at 2.4 trillion naira, recurrent expenditure at 4.8 trillion naira, statutory transfers at 560 billion naira, debt servicing at 2.7 trillion naira, and a fiscal deficit of 2.2 trillion naira.
Investing in critical infrastructure, in human capital development, and enabling institutions is key in job creation. Incentivizing private sector investments is essential to complement the federal government's development plans, policies, programs, and remain a key focus in the year 2020.
A look into the budget shows that the Ministry of Works and Housing got the largest allocation with 315 billion naira. The Ministry of Power, 129 billion naira. Transportation got a share of 121 billion naira. Ministry of Education, 185 billion naira. And 116 billion naira for the Ministry of Defense. Other details captured in the medium-term expenditure framework includes 61 billion naira for the Presidential Power Initiative, 1.2 trillion naira for federal-funded projects in the oil and gas sector, and a 277 billion naira transfer of Tertiary Trust Education Fund. While expectations are high on how well the budget will impact the lives of Nigerians, officials have assured that with its renewed drive for revenue generation, government will ensure that the budget is fully implemented.
We have a lot to talk about next week, don't we? Enjoy your weekend. I'll see you on Monday. Bye for now.